Now, the fourth way to make passive income with $1,000 is to look into bonds. Not that bond. This bond. Now, this one has been quite popular lately with some of the skepticism surrounding the stock market valuations at this time, and if you don't know what a bond is, here is the answer. Companies, states, governments, and so on will give you a chance to invest in them, and if you give them a loan, they will pay you back with interest. They set the terms of the type of loan they want to get, and it's really up to you if you want to invest in them or not. Now, bonds have what's called a maturity date, which means that's the length of the loan that you're giving to someone else before they can pay you back with interest. And that could be anywhere from a few months to sometimes years or even decades. Now, the good thing with most bonds is that they're very, very, very safe, they're very stable, and you know exactly how much you're going to be getting paid by the time the loan matures. Like if you go and invest in a government bond or a state bond, the chance of the state or the government not paying you back as agreed is pretty much not going to happen. And if it does happen, we got huge problems. Now, when you invest in companies, on the other hand, that could be a little bit riskier because the company could go bankrupt. So that's why they end up paying a little bit more if you invest in a company versus investing in the government. Now, if it were me, I would probably just invest in a bond index fund. Like we have the Vanguard Total Bond Market Fund, which pays 2.66% annually, and you'll have a very safe, stable return without worrying too much about wild stock market fluctuations in price. Or you also have this one from Vanguard, Volatile. I can never pronounce that. Volatile, whatever it is, yeah, so they pay 2.81% annually. Now again, this is a pretty small return compared to some of the other options I gave, but this is going to be a very safe, very stable return, and also the value of the bond can also end up going up over time. And I probably recommend that most investment portfolios out there just keep some bonds in them, even